If you look around the American business landscape right now, something huge is happening. From that local coffee shop you love to the giant tech companies, a massive handover is underway. Millions of founders are quietly planning their next move, their exit, and it's a trend that is literally about to reshape our entire economy. So let's unpack what's really going on with this great entrepreneurial exit.
Just get a load of this statistic from a recent global report. 63%, nearly two-thirds of all U.S. entrepreneurs are planning to leave their businesses in the next few years. That's not a small ripple. That is a seismic shift.
And that, of course, brings us to the million-dollar question. Why now? Why is this happening all at once? Is this some kind of warning sign for the economy, or is it something a lot more strategic going on behind the scenes?
All right, so here's how we're going to break this all down. We're going to look at the three main reasons this is happening: the money, the risk, and just the simple fact of time. Then we'll dive into the new opportunities this whole thing creates, and finally, what it means for the U.S. economy.
Okay, first things first. Let's make sure we're all on the same page. What do we actually mean when we say a business exit?
Right, so an exit isn't always about just closing the doors and walking away. It's a strategic move. It could be selling the company to the highest bidder, or maybe merging with another business. It could even be passing the torch to your kids, or just stepping back from the day-to-day grind yourself.
And listen, this is not just a Silicon Valley thing, or a story about small shops on Main Street. This is happening everywhere. From tech startups to old-school manufacturing, from big retail to high finance. It's a massive, economy-wide phenomenon.
So, what's the number one reason we're seeing this wave of exits? Well, it's pretty simple: money. Entrepreneurs are smart people, and right now they're looking at the market and seeing a golden opportunity.
To put it plainly, for a lot of these private companies, the price is right. After years of hard work and growth, their business valuations are at or near an all-time high. For an owner who's been through it all, that's a pretty clear signal.
Just look at the difference a few years can make. For a founder who has poured their blood, sweat, and tears into a company, that huge jump in value you see today, that's not just a number on a chart. That's a life-changing amount of money.
And you can really hear this thinking when you talk to the owners themselves. This isn't about quitting or giving up. It's about capitalizing on decades of hard work. They see this as the perfect moment to lock in their financial future.
But it's not just about chasing a big payday. There's another really powerful motivator here, and that's the desire to avoid future losses.
Let's be real, the economic waters are pretty choppy right now. Business owners are looking at rising inflation, crazy interest rate changes, and global conflicts that could throw a wrench in their plans at any moment. Selling becomes a way to get to a safe harbor.
So exiting becomes this really savvy defensive move. It's like, why risk it all in a potential downturn when you can lock in your profits today? Selling now is about protecting what you've built.
Okay, so the third major driver here isn't just about economics. It's demographic. We are smack in the middle of a massive generational handover.
Just think about it for a second. An entire generation of entrepreneurs, the baby boomers, the ones who started their companies back in the 80s and 90s, well, they're all reaching retirement age now. It's a completely predictable and incredibly powerful force.
This timeline here really tells that story perfectly. You start a business in your prime, you spend a few decades growing it, weathering the storms, and now you've reached the logical next step. It's time to enjoy the fruits of all that labor.
But here's the really interesting part. One person's exit is another person's entrance. This whole trend isn't just about endings. It's actually fueling a whole new chapter of business opportunities.
And the process is pretty straightforward, but really powerful. An experienced owner steps away, which puts a proven successful company up for grabs. That attracts investors or other companies, who then come in with new money, new leadership, and new energy to take it to the next level. And the result of all this? A red-hot market for mergers and acquisitions. We're seeing a flood of fresh leadership taking over established companies, which, often leads to cool new innovations and different strategic directions. It's a massive transfer of assets and opportunity.
So let's zoom all the way out. What does this huge wave of exits really mean for the U.S. economy as a whole?
Well, there are two ways to look at it. On one hand, this is an incredible opportunity for new innovation to just flourish under new leadership. But on the other hand, there's a potential risk, right? If too many experienced owners all leave at once, it could create some instability in certain industries. But the general consensus among economists is pretty optimistic. They believe the U.S. market is fundamentally dynamic and tough enough to handle this transition without too much trouble. I mean, the system is kind of built for this sort of change.
So at the end of the day, the Great Exit isn't some fire alarm signaling a panic. It's really a perfect storm of smart, calculated decisions, driven by record-high valuations, a bit of economic uncertainty, and a simple, totally natural generational shift. And that leaves us with one last really fascinating question to think about. As this generation of owners cashes out, is this massive transfer of capital and opportunity going to light a fire under a whole new generation of American entrepreneurs? I guess only time will tell.